warm welcome. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi, and the closing trades are looking very, very smart because we are sitting at the highest point of the trading session, 19,800 thereabouts, and above that comfortably. So at the moment, 19,840 actually for the Nifty. It's not just that, even the broader markets are actually participating quite healthily. In fact, mid-cap and the small cap index both are actually sitting at record high levels. So small cap index has been scaling fresh highs, and mid-cap index has actually managed to scale fresh record high today. IT index, that's powering ahead, one of the top sectoral gainers today. It's the biggest single session gain that we have seen in the IT sector in the last 4 months. And pick up any of the names, right from a TCS to a Coforge to an Mphasis, all of these stocks are firing away in the trading session. Nifty Pharma is your second top performer sector. It's actually sitting at 1 month high, and quite a few stocks from that vertical too, sitting high by anywhere between 3 to 5%. The only sulkers or, the drags on the markets right now are FMCG as well as PSU banking space. So that's in the slow lay, but other than that, it's a very, very vibrant market that we have at our hands, Aisha.
Absolutely, and for technology to actually hold up for a second consecutive day is quite meaningful, and across market cap categories. Anisha just flagged off the large caps, but JP Morgan, for instance, has come out with a note this morning talking about how significant interest they have within the niche segment, that of auto ER&D. So their top picks are Tata Elxsi, KPIT, L&T Tech. Of course, it has to be noted that KPIT has already had its time in the sun, though of course the street is clearly divided on whether or not there is a meaningful upside from the current levels in a Tata Elxsi or not. That we'll of course chat about with our experts in just a short while from now. But Europe, has started off a little bit all over the place, quiet but with a marginal positive bias, at least for markets like DAX, FTSE, or for that matter FTSE MIB. We clearly seem to be the region outperformers so far because Asia, remember, has had a bleak trading session today. While some of the markets did recover from their session lows, Hong Kong, Shanghai, Japan, they still closed very much in the red. Of course, there was anticipation ahead of the US-China talks, and it's a two-day meet. Day one is already done, but day two is still yet to take place. But at the high point of the day, couldn't have asked for anything better. Kunal, what are you reading on the charts from here?
Yeah, I think a perfect script for the markets. The Nifty's managed to come back about 19,800 today. The Bank Nifty, I think, is looking quite charged up. And what I like about the markets as such is the holistic participation across so many sectors. So autos making a comeback, two-wheelers, four-wheelers making a comeback. Then you've seen metal stocks also managing to recover. Tata Steel, I think, is on the verge of a breakout of the 50-day moving average. IT stocks are seeing a very strong round of short covering over the last 2 days, specifically today. So I think when you have such kind of a streak where the huge underperforming sectors, when these stocks and when the sector makes a comeback, it's just a matter of time that the index will also gain momentum. So 20,000, I think, is just another 150 odd points for the index, which I believe could be achieved hopefully in the next few trading sessions.
Right. The script looks perfect. Now all we need is, I think, a World Cup win and Monday 20K.
Oh, I think that'll be doubled.
That'll be amazing, wouldn't it? Okay. Naresh, where do you think the leadership is going to come in from? It's IT, Auto, which are now participating quite a fair bit and leading the charge. But could it be the same from banks, for instance?
So the leadership has been clear in terms of auto stocks, which have been leaders. It's just that their weightage is low in the index. Even in the banking space, you can clearly see the leaders are Axis Bank, IndusInd Bank, but the weightage continues to be low. So in terms of the high weights, what could lead from here is a Kotak Bank and HDFC Bank making a bounce back because they've corrected quite a bit and have been sideways for quite a long time. And Reliance Industries. So Reliance has gone nowhere for a long period of time as well. So a recovery in the heavyweights and the leadership which is going on should continue. We've hit, interestingly, Nifty 50 equal weight has hit a new all-time high. So that clearly shows you that broader base momentum is pretty strong in the Nifty names as well. So we are seeing leadership continue. Something like Maruti has done well, and now even we are seeing a Hero MotoCorp make a new 52-week high. So clearly we need a little bit of a help from the heavyweights, and we could be crossing 20,000 pretty quickly.
Well, yes, and I was just going through the stocks sitting at record high level, and it's a very, very long list, right? From a Craftsman to MapMyIndia to a KPIT Tech to an MCX to NTPC, Oberoi Realty, Tata Motors. Titan, the list is really, really long, and I'm not even halfway through that. Mayuresh, what do you make of this? I mean, just a couple of weeks ago, there was this entire worry about mid-caps being frothy, the valuations being a bit of a trouble for the small caps, and they have bounced back the strongest after those corrections.
Afternoon, Anisha. Oh, absolutely. I think the mid-cap and small-cap index probably look very, very resilient across time buckets. And even in the fall that we probably saw, there were some jitters for the broader market fall. But the bounce back has been equally sharp, which shows the resilience of global and local investors, specifically local investors, when you're talking about ultra HNIs, retail investors as well, because that is where the focus area of the market has been. FIs are largely focused either on the index stocks or largely liquid stocks within the mid-cap pack. So the bounce back in terms of how the India story probably stands, and with a lot of tailwinds that the global markets are now giving us, both in terms of data points as well as expectations of not hard landing in the US markets, as an example, European markets inflation cooling off, both core as well as the nominal inflation that we are probably seeing, is giving signs that over the next few quarters, as the markets are expecting rate cuts as they start coming through, discretionary spending patterns will hold out and India probably stands out. So I think it has been a resilience performance. But yes, within pockets of this space, one really needs to be a little bit more careful, because some pockets have probably overstretched themselves in terms of how the valuation matrices probably look.
Right. Mayuresh, hi, afternoon. Where do you think the next leg of contribution is going to come in from? And, you know, the move that you're seeing in the large cap IT space, do you think that's justified? I mean, is there merit in buying large cap IT right now?
Afternoon, Aisha. I think the entire argument between mid and large cap IT was largely laid down by the thesis in terms of consistent order wins coming through for the mid cap players. They were seeing no price and demand destruction happening at their end. And even in periodicities where the large cap IT companies were reporting reasonably soft set of order inflows, though the order inflows have been reasonably strong, even for the large cap IT companies till date. The extent in terms of management commentary for constant currency dollar revenue remaining strong, no issues seen from the client side, probably gave the kind of moves. And we are still seeing those moves in a whole host of mid-cap companies. Now, the valuations for mid-cap IT versus large-cap IT have obviously expanded significantly as we speak. And therefore, with the expectations of a soft landing in the US, discretionary spending patterns should normalize by the first half of the next financial year. And as that happens, what you're expected to see probably and possibly is that revenue guidance in the next financial year probably comes back to the normal track with normal EBIT margins, which means a lot of IT spending, which surrounds AI, cloud computing, data centers, the 5G ecosystem, should bounce back very, very smartly as the rate cut cycle gets initiated in the second quarter of the next financial year. So to that extent, I think the large cap ITs, maybe 1 or 2 quarters of more softness can probably be expected. Generally, a weak quarter expected in the third quarter with a lot of furloughs expected and client discretionary patterns expected in the fourth quarter as well. But I think they should bounce back very, very smartly and fill in the valuation gap that the mid-cap IT companies versus large caps probably have. So yeah, if you probably ask me at this juncture, maybe after this quarter's numbers, large cap IT becomes a very, very interesting proposition to probably.
Sure, point taken. What about the auto and auto ang space, Mayuresh? Craftsman automation is at record high level, 7% higher. You also have Bosch, which is actually making quite a bit of move, and that's a large move given the stock is almost 20,000 rupees and above. So 4% move as far as Bosch is concerned. And other auto players, Hero MotoCorp, as they came out with the announcement that the retail sales during this festive season has been at record high as well. How would you play this theme?
It's one theme that structurally looks good, Anisha, even at this point of time. So whether you talk about two-wheelers, the passenger vehicles, or even the MHCV segment, as far as the OEMs are concerned, the numbers have held up pretty well. And as the transitioning probably happens specifically for two-wheelers and TVs, from internal combustion engines to the electrical mobility platforms, and new launches expected over the next few quarters, the kind of footfalls that we are seeing, the kind of order books that we are seeing for PV players, two-wheeler players as well, the new launches which are very well accepted, specifically for two-wheelers, even in higher CC segments. I think that lays heed to the point that the kind of structural story in terms of demand probably still remains intact. When it comes to the supply factors, a lot of input cost inflation related issues, the semiconductor related issues largely behind. Yes, we are hearing with steel prices a little bit on the higher side. Some negotiations are happening between the OEM players. But even if that happens, the marginal pass-through will probably come through. Auto anchors, again, as a corollary to the entire auto industry, both for the OEMs where the demand stays strong, as discussed, and the replacement market, where the demand probably is expected to remain robust as well. I think both these legs are working for a lot of these players. And that has been exhibited through numbers. So you look at numbers for battery makers as an example. Shaikh Side, Amara Raja gave decent set of numbers. Again, the transition that they are doing towards the lithium ion, the capex that they have made, both these players, the transition will be gradual and a very transient one, which means that the capex that they'll probably do will be in the right direction without having too much of stress on their balance sheet or front loading of a lot of debt on the balance sheet and internal accruals doing the trick for them. Similarly, look at companies like Gabriel as an example. I think it had a huge move yesterday. Sequentially, year on year, a good set of numbers that they probably reported. Minda Industries has always been a top-notch player when it comes to the auto anchor and the entire transition from the internal combustion to the electrical mobility platform. So yeah, structurally, I think the space looks very, very good. Is valuations a little bit on the higher side? Definitely, yes. Is a cool-off expected for fresh entries, specifically in two-wheelers, PVs, specifically two-wheelers, if you ask me? Yes, but anybody holding on to this space can definitely work on. And auto ancillaries, as a corollary, looks far more interesting with the kind of names that are from this space.
Right. Okay. Well, all eyes now are on the first Tata Group firm, which is going to go public in nearly 2 decades. We're talking about the Tata Tech IPO, a wholly owned subsidiary of Tata Motors. And the IPO is all set to open on November 22nd. In fact, hear it out from Warren Kevin Harris, the CEO and MD at Tata Technologies.
What I can tell you is that we are incredibly ambitious in terms of the value that we want to deliver to the customers that we work with. We're incredibly ambitious in terms of growing the breadth and depth of the capabilities that we represent. We truly believe that India will be the innovation and the engineering hub for the global manufacturing sector. We are, as confirmed by Zinnov, as the #1 automotive engineering service provider here in India, and we're going to work very, very hard to protect that position. We are investing very heavily to improve our positioning in aerospace, transport, construction, and heavy machinery. And as I referenced before, I truly believe that India will be the innovation hub, the platform from which the majority of product development work will be driven in the future. We believe that we are in a fantastic position to be able to fulfill that potential for Tata Technologies, for the Tata Group, and to make a meaningful contribution to what will happen to the industry over here.
That's the take coming in on Tata Technologies and what they intend to do with the business going forward once they IPO on November 22nd. But Mayuresh, great to have you on the show. We'll let you go on that note. Seems like you're in a bit of a rush today. In fact, we're holding out quite okay, about 150 odd points up in the green. It continues to be technology, but within the broader universe, there's also Bosch, Manappuram, which are also scaling quite smartly up in trade, in fact holding out 4.5% to 6% apiece. We'll take a very quick break. We'll continue tracking markets on the other side.
Welcome back. Market holding on to good gains. A 600-point rally as far as Sensex is concerned. Nifty 2 now past a level of 19,850, so 150 points away from that 20,000 level as far as Nifty goes in terms of the stock specific move. Of course, from the broader markets, IT, so Mphasis, Coforge, these are your top gainers. You also have Sterlite Tech, which is higher by 8%, Alok Industries, KNR Constructions, and Honasa Consumer. That's finally back. It's above its issue price. 333 thereabouts is where the stock is at. Let's pull up the stock of Mamaearth if we can. So that's up by 6% and back above that 333 level. CESC is also seeing good amount of volumes today, so tracking that. On the losing side, you have PDS, which is down 5%, Kalyan Jewelers, Jyoti Labs. These are some of your losers. But Naresh, what's your take regarding the pharma stocks? Glenmark, Glaxo, Dr. Reddy's, Lupin. These are doing well for themselves today. Anything on the charts that looks interesting?
So out of these names, Dr. Reddy's is first, which I like. If you look at the stock had made a solid move from 4,400 all the way to 6,000 almost. Then made a slow and steady lower drift towards 5,250. Classical bullish flag formation. And today we've crossed above that flag trend line above the 5,500, 5,550 mark. This ideally opens up a move back to previous highs. So I would expect a move towards 6,000 levels for the stock. So Dr. Reddy looks promising. Lupin has been in a strong trend for quite some time, so the risk reward is not great. But the trend still remains positive. The next interesting one is the other larger name, which is Sun Pharma. The stock is coming back to the same prices where it had topped out in 2015. So 8-year breakout on cards. So it could be time for the large caps to do well, and the smaller names which are turning around to do well. So we've seen what has happened with Wockhardt Pharma. So would be watching out for something like a Biocon if it starts reversing. But for now, it is the large caps which look promising, Dr. Reddy's and Sun Pharma.
Okay, some of the other buzzing names in trade, and we've been marking what MCX has been up to. Let's just bring out the 1-month chart for MCX. Quite a few, volatile gyrations, but the last 10 days have been extremely strong for MCX. There you go, a 35% move, and the chunk of the move has only come in the last 18 odd days or so. Naresh, just wanted to get your sense on what you're reading on the charts of MCX.
So what we are seeing is an overextension for the stock now. A lot of us liked it at 1,800, but most of us thought that 2,500, 2,550 should be a pause for the near term. Right now, the stock gets into the derivative band. There is a discount in futures. So at these levels, the risk reward is not great at 2,900 to 3,000. Time to book profits. Stock should consolidate going forward. We may not see a major spike from here. Cannot short the stock given that the condition is more like a case of where the stock has doubled up in the last 3 to 6 months. So a pause is warranted. So for now, it's a case wherein book profits at least to some part of the position and wait it out. Could get into a new range of 2,600 to 3,000.
Okay, here's the word then coming in from Mark Mobius as well, partner Mobius Capital. And we spoke with him today. He, of course, believes that India is in a stellar shape, has good companies with great market momentum, or for that matter, growth visibility. But he also says that, on the upcoming 2024 elections, he says that it's almost imminent that we will see the current regime continue.
And have a good Christmas. But you must remember, in a bull market, there always are corrections, so you have to be ready for those corrections. But at the end of the day, India's in such good shape, such great companies. There's no question that things will continue the way they are, and the market will go higher in the long run with corrections along the way. I'm now in Goa, but I've been to 6 Indian cities in the last 4 weeks. And it's been quite revealing to me to how great the infrastructure building is going on and the incredible vitality of this nation. I think India is going to go from strength to strength. I think it's pretty certain that Modi will be reelected. So most of investors, I believe, have assumed that to be the case, and it'll be business as usual. So the questions about the Indian election are probably not as complicated as the situation in the US, where it's a little bit more uncertain, let's put it that way. So I would say that it's business as usual and life will go on with Modi in charge.
Okay, so that's the latest coming in from Mark Mobius. Of course, India is something that he has been liking and has been quite vocal about that. Separately, what about metals? Because they were coming back into the flavor given the entire momentum that we saw across the globe. Kunal, any stock that you would want to bet on, or even gold directly? Because at one point of time, you were quite bullish about gold itself.
Yeah, so I think gold has done reasonably well over the last 10-12 months when we spotted the breakout for gold prices. But on the metal index, I think this is a interesting mix because earlier in the last 1 or 2 years, JSW Steel was one of the strongest performer from the large cap metal pack. Right now, you have JSW Steel, which is coming out of a corrective wave. The betting names in terms of charts which are poised for breakouts are the likes of Hindalco. Jindal Steel is also trying to get into a recovery phase. Tata Steel is looking attractive at 124.25 levels for a potential further breakout. So it's not the usuals which have been performing over the last 1 or 2 years, but you have different mix this time around. Vedanta has been a stock which has gone through a lot of news flow, and you've seen the stock going into sharp correction. So would probably avoid taking a bet over here. But I think the favorites actually remain the fresh larger cap names in terms of a breakout, Tata Steel, Hindalco, as well as Jindal Steel.
Okay, so that's the latest coming in as far as some of these metal names are concerned. But let's do one thing. Let's take a short breather on the show. The market rally continues unabashed. It's around 19,850. But before we do that, quickly, let's take the closing trade ideas also from our technical experts. Naresh?
So that would be Hero MotoCorp. The stock has finally given that breakout above the 3250, 3280 mark. A new 52-week high for the stock, finally showing outperformance. Looks setting up for a move towards all-time highs.
Fair enough. What about you, Kunal?
So I'll bet on Reliance Industries, something which we discussed in the last couple of days. Looks attractive, and the stock has confirmed the breakout of the 50 moving average. So I think that's a sign that possibly the near-term trends are reversing for the positive for the stock.
Sure enough. So now that break, and then when we come back, we'll discuss the last 30 minutes of the trading session.
Back for closing trades right here in ET now, holding out quite well. In fact, we are the region outperformers on our way to actually clock that 19,900 mark, at least on the Nifty futures. Coforge, Manappuram, Mphasis, it's the midcap IT basket, which is looking extremely strong, along with, of course, large caps as well. I mean, TCS is holding up a good 3.5%. It's a 3% move, no less, on Mphasis as well. If we can just highlight some of those IT charts for you. They're the ones which are really charging ahead quite smartly. There's, of course, Hero MotoCorp as well with a good 3.6% move. It's the top mover on the index right now. And then names like Bosch are also doing very, very smartly in trade right now. You've got a Bajaj Auto, M&M. They're all chugging along very, very nicely in trade. But let's just address what's not working out well in the market. Naresh, if you had to flag off the weak link in the market right now, considering that even IT has now jumped back into the rally, what would you think is, looking a little, at least in consolidative phase, if not weak?
In terms of, say, underperformance, it's been ICICI Bank, which has been a surprise. The stock has gone nowhere. We are not seeing a spike. Generally, the stock had a correlation with the Bank Nifty as well as the Nifty. In the last 5 sessions, the stock is at the same place around 940. And that's a good weight in the index as well as in the Bank Nifty. So that is one. Second is HDFC Bank, which has still not been able to cross any meaningful prices, just barely able to cross the last 3-week highs. So HDFC and ICICI, which is almost 40% of the Bank Nifty and almost closer to 20% of the Nifty. These are the two names which are yet not seeing some momentum. It's only when they start seeing momentum, it becomes easier for the index to cross that 20,000, 20,200 and the 45,000 mark on Bank Nifty.
That's the latest, but the Bank Nifty has actually given up quite a few gains, and ditto can be said for Nifty as well. So from that 850 mark, suddenly there's a drop of 50 points. And take a look at Bank Nifty. Let's pull up the candlesticks if we can and see what kind of bars are visible as far as Nifty Bank is concerned and which are the stocks which are actually pressurizing that index right now. Because if I look at it on my screen, it's Axis Bank, which is down 1%, ICICI Bank, as Naresh also was talking about, and Federal Bank, Bandhan Bank. These are some of the other drags as far as Nifty Bank is concerned. We'll come back to it, but in the meantime, let's go across to Somit to get a sense as to why some of the oil marketing companies are in focus today. Somit?
Well, for the oil marketing companies, it's a double treat. In fact, if you see, crude prices have come down to around $80 per barrel, and whenever crude prices come down, the gross marketing margin for the oil marketing companies that they earn by selling every liter of petrol and diesel, that increases. Now, when crude was at $97 per barrel, the oil marketing companies were actually making losses by selling petrol and diesel, and now that has turned profitable given the fact that crude has come down to $80 per barrel. In fact, on petrol they are earning around 4.5 to 5 rupees per litre, and on diesel they are earning 1 rupee per litre. Earlier they were making a loss of close to 6.1 rupees per litre on selling every litre of diesel. Along with this, the Singapore gross refining margin, which is the Asian benchmark for refining margin, has also surged back to around $7 per barrel from its recent low of close to $1.5 per barrel. And generally, every $1 per barrel rise in the gross refining margin increases. If you see MRPL's EBITDA by around 1,000 odd crore rupees, Chennai Petro's EPS increases by around 30%. For Indian Oil Corporation, BPCL and HPCL, their EPS increases by nearly 14 to 16%. And for Reliance Industries, the consolidated earnings are increases by around 4 to 5% with every $1 per barrel rise in the gross refining margin. However, this drop in crude oil prices could have some negative impact on the oil marketing companies, given the fact that there could be some inventory losses for them in the third quarter of financial year 2024.
Right, okay, that's the take coming in on OMCs, which also of late have been charging up ahead. But let's welcome on board Gurmeet Chadha, find out what he's making of the markets right now. Gurmeet, I was just telling Kunal, who's been tracking the charts, that the World Cup win and maybe Monday we'll welcome 20K.
Hopefully, fingers crossed for both. And this is what markets does, and we have seen it now so many times. The moves are very sharp. The news get discounted both ways very quickly. So moment the US inflation came lower, moment there was a fall in dollar index and the US 10-year, we saw a decent reprieve for the market. But as I say, I think the odds are evenly balanced. We have more things coming up. We have state election results on 3rd December. We need to see how things go. But overall, I think directionally, I think things are looking very constructive as far as India's macro is concerned. We are in a perfect Goldilocks. Corporate leverage is all-time low. Bank NPAs are pretty low. You see corporate profit to GDP, it's back to 5%. So at a macro level and at a micro level, I think things are looking better.
Right. Gurmeet, the other thing we were looking at was the kind of participation that you've had from the IT sector the last two trades, right? I mean, even today across market cap, IT is the one which is most charged up along with, of course, autos. You think there's merit in looking at IT right now? And are there really any signs hinting at a recovery?
No, actually, so there is some merit in probably some large caps, but mid-cap ITs run up. Just look at the way Persistent or KPIT, even Tata Elxsi to a certain extent has run up. So wherever there has been a bit of a resilience as far as deal making is concerned, order wins are concerned. KPIT, for example, has the best on-site mix. Things have turned up well. And large cap, I think there is still, in my view, you should wait for a broader recovery in US markets. I think moment the Fed formally announces pause, I think that probably will trigger a bit of an upside for IT. So I think Mphasis, HCL, in my view, are pretty reasonable at these levels. But in my view, probably have to grind out for maybe 1 or 2 quarters more.
Yeah, it's about whether you want to grind out that 1 to 2 quarter pain, or are you looking at the best opportunity and doing some bottom fishing. So that's the call you'll have to take. But other than that, Gurmeet, have you looked at Mamaearth's IPO as well? It started off in a bit of a limbo, then went below the mark of 300 rupees. Now it's bouncing back quite a bit. Any thoughts here, Honasa, and even Tata Tech for that matter, because that's the next IPO that everybody is waiting for?
I'll probably wait for some better financials to come. We got a little constructive on Zomato a couple of quarters back. I think now there is, the contribution margins is improving. The gross order value is picking up well. 40% jump in their gold membership as well, which means a lot of repeat customers coming. It's now a duopoly now. I think most of the players have tried their hands, including Amazon in Bangalore. I think it's a duopoly now. So probably there's high entry barrier to the business. And I think the way they have done well in this festive season, even Blinkit seems to be on track. I think they've indicated, turnaround next year. Hopefully that should happen. But I think the only risk remains the take margin, which is 22-23%. And there is some resentment in tier 2-3 towns where the take rates are much higher. I think so. There could be, you have to watch out for that and the impact of ONDC there. But amongst all the ones, I think this is the one probably which looks most interesting.
Kunal, on the Bank Nifty and the constituents, what do you make of this sharp drop?
Yeah, I think I was looking at the components. It was a few large cap names like I think ICICI Bank corrected by 1%, HDFC Bank also corrected by some 20 odd points. So very few restricted larger cap names which have gone through a correction. Bank Nifty back below the 50-day moving average. I think that could be a concern for the banking index. We'll need to see how the closing rates shape up, whether there's any kind of a recovery in the next 15-20 minutes, which could probably lead the bank index back above the 50-day moving average. But yes, the sharp selling has been quite prominent across the banking index. It started off from there, and now I think it's moved on to the other constituents as well.
Yeah, it has. IndusInd Bank has flattened out. Even some of the other heavies like L&T are lying absolutely flat. Kotak Bank as well has completely fizzled out. That's the case with SBI as well. ITC2 is now just about marginally soft.
Yeah, but do you think this could be the weekly expiry move? Because is that coming at play at 3 p.m. today?
I think it's the Nifty expiry move today. Bank Nifty is already expired.
Bank Nifty is changed to?
It's changed to Wednesday.
Okay, so it can't be even that, this sudden drop.
Correct.
Okay, nonetheless, we were asking that question to Gurmeet as well as to what he makes of the banking index right now and the constituents. Gurmeet, the question on the banking index, the large private banking names which have been underperforming, would you be a buyer at these corrections? Will you wait by for such corrections to just take up these long-term ideas and investing bets?
Well, absolutely. I think while I know it's been a grind in some large private banks, HDFC for 3 years now, ICICI Bank for almost a year. But I think the risk reward is much favorable vis-a-vis the NBFCs. A lot of good NBFCs are already trading at 5+ book value, whether it is Chola, whether it is Bajaj, whether it is some of the new digital ones, including let's say Poonawalla, etc. So I think banks offer better risk reward, and if rates remain higher for longer, I think the liability side will start differentiating. So I think the Axis is below 2 book value. SBI is almost 1.1 book value. So definitely, and I think in an economy which does 7% kind of a GDP growth, 12% nominal growth, the credit growth is usually in line with nominal GDP growth. So I think we will probably sustain 14-15% credit growth, and I think banks should do well. So there is some margin of safety also, especially in HDFC, ICICI, and Axis.
Okay, point taken. So that's the view coming in on some of the banking names. What else is happening? And is Nifty also losing steam? Let's pull up the Nifty chart and see what is that up to. So yes, that's also dropped almost 100 points from the day's high. It's 19,740 now. Of course, if the Bank Nifty is reacting, there would be a parallel impact when it comes to the Nifty as well. Let me take a look at the other drags as well. So apart from ICICI Bank and Axis Bank, ITC, that's pressurizing the index by around 9-10 points. You have L&T and Coal India as well. Naresh, come in on the charts of ITC and L&T.
So again, going sideways for ITC now after that big move which happened in July, it went to 480, 500, topped out on the good news. Now the stock has become sideways. Earlier, the support was around 435, broke below it, but did not see any selling pressure. On the upside, 450, 55 is a resistance. So expected to be in a range of 430 to 450. So roughly a 20-point range going forward for some time to come. So technically no trade here. L&T similarly made a top around this 3150 mark, made a little bit of a drift, did not break the recent swing lows. So now, for now, the range is 3130, 3150 on the upside. and 2,900 on the downside. So for now, still sideways on L&T. Longer term trend is still positive for the stock, but for the short term, sideways.
Okay, point taken as far as some of these industrial stocks are concerned. In the meantime, let's take stock of what's happening in the broader markets as well, and which are the stocks which are still holding up with good gains. So you have names like KPIT Tech that continues to be in that list. Mahindra, Manappuram is actually also doing quite well, and then Mphasis sitting with a gain of almost 5%, Prestige, etc. Some of the other names as well. On the losing side, Jyoti Labs is one stock, and Kalyan Jewelers as well as Welspun Living. Gurmeet, what's your take on this entire textile and the retailing space? Welspun Living has been doing quite well for itself. Trent obviously continues to report very solid set of numbers. Though Page Industries and others haven't been doing so well. Which are your top bets?
We have a mixed view here. One thing we like is the apparel export. So we were lucky in terms of getting into Gokuldas much early, almost 6 months back. They've just acquired a company in Middle East which has plants in Africa. So not only you get the labor cheap, they also have access to EU with some duty exemptions. Also, Bangladesh this year has a wage revision which happens after 10 years. So that cost advantage also should get mitigated a little bit. They acquired this company at 7 times. So they do about 2,200 crores top line. The company they acquired does about 700 crores. So despite the run up, the stock is still about 20 times. And if the UK treaty goes through, I think they would benefit. They make, they work with players like Gap, Puma, Adidas, H&M, etc. So largely US, 80% is US. So that's something we like. KPR we like. So we are selective here, but so you have to track what are beneficiaries of PLI, what will get benefited due to the regional treaties we have. So there's a bit of regulatory and political angle in it. So you got to be a little more selective.
Gurmeet, just stay with us. I'm going to quickly take it across to Sharad as well and find out what the dealing room chatter is. What are the stocks which are being talked about? Sharad?
Well, yes, in focus we are having walkout, and what we are hearing from the dealers is that a strong delivery-based buying is coming for the stock, and this is coming especially in the HNI category. Now the volumes also, if you look at it, it's almost 16 times its 20-day average, and the stock itself has given its highest jump seen on almost 20 odd months. Now importantly, the volumes have also been very strong, and company came out recently with its Q2 numbers also, and the numbers were very strong, especially on the operational front. The losses, they reduced as well sequentially as well as on a year-on-year basis. Now the street is factoring in a turnaround strategy also going ahead for the company, and do remember that in terms of marquee investors, Rekha Rakesh Jhunjhunwala has almost 2.04% stake in the company as well.
Okay, all the buzz around walkout. But Gurmeet, since you just flagged off and, talked about the state election results, just wanted to understand whether that's going to be a market-moving event at all or not. Or do you think that's pretty much in the price?
No, unless there is a big drop in vote share, of the ruling party, I think it shouldn't be a more than a couple of days event. But on the contrary, if they do well, and win probably a couple of states, I think the market should take it positively. I think the focus should be more, on rural-facing stocks. I think that's where as a portfolio manager, I would look. But that's the part of the economy which is soft. Urban is clearly doing very well. Also, there's a lot of negative news in agrochemical space, two-wheeler space, and the rural economy linked themes and sectors. I think that's where probably there is some value for money. So look at, for example, PI Industries. I mean, it's done very well considering it's the CDMO play in agrochemicals, considering the non-performance in others. It really stood out, right? So something like Tata Chemical traded 10 times. Again, agrochemical play, soda ash, as well as they're also into specialty chemicals in terms of battery parts. So there's a lot of valuation comfort in that space. And if things turn around, I think agrochemical, two-wheeler ancillaries, I think they offer a lot of value.
Okay, point taken. But since we are talking about a few IPOs as well, there was one listing that happened on Monday, and that was Protean E-Government Technology Limited, or NSDL as we know it. That stock had seen a listing of around sub 800 rupees, and earlier in the day it was trading above that, very close to that 1200 rupee mark. It's actually cooled off quite a bit, as has the rest of the market, because at one point of time it was up almost 15-16%, but now still holding with a gain of around 6%. We spoke with the management earlier. Listen to what they had to say.
We are expanding into new areas. Our first area of expansion is in the space of open digital ecosystems. This is largely leveraging on the underpinnings of the government policy framework, where the government is looking at national open digital ecosystems being created in multiple sectors. We are today having interventions and ODEs which are supported by the company at an infrastructure level in the space of digital commerce, mobility, health, agriculture, and education, which takes us from our strong points of the BFSI sector but gets into multiple sectors for us. Similarly, on the ID services side, we are looking at a vertical integration, which is our second business foray, to build a complete digital onboarding and data allied services business, where we are also going to be leveraging our account aggregator license, which we received from the Reserve Bank of India. And third, we are looking at building a business on cloud services and InfoSec consulting. So we move from a 3 vertical to a 6 vertical business. The intent also is to take this entire unique combination of DPIs to global markets, especially to developing countries which are at a similar stage where maybe India was a decade ago.
Okay, quite a significant drop actually on the Nifty Bank, a good 0.6% fall from the top of the day, and that's clearly having its rub off, unfortunate as it may be, on the Nifty too, because the Nifty as well is now about just 0.3% in the green. Having said that, barring metals and banks, the rest of the sectors are holding out very, very smartly. Autos continue to chug along. There's of course IT, which is holding out very smartly, like we said. And then besides that, even Bajaj Finance for that matter, what a remarkable recovery you've seen in that stock price after that knee-jerk reaction that you had when the stock opened for trade. That's completely gotten bought into. I think it was down about 2.5% to start off trade with. From there, it's holding up 2.5% as we speak. Gurmeet, what's your take on Bajaj Finance? You don't think this RBI move, although the company has clarified that it's just going to be for 60 days, but who knows, it could get extended, that's going to have any meaningful impact on Bajaj Finance, given that the festive season or a chunk of it is already behind us now?
We just want to wait it out in terms of, I think the incremental impact is probably 3-4% on the two categories. And also the issue relates more to the classification rather than any serious compliance issue. So hopefully, I think there should be a speedy resolution. Also, they've done a fundraise. Earlier the concern was because the stock is expensive, trades at 6-7 times. Can they sustain 30% growth? So I think they've upped the guidance now, looking at the QIP, etc. So I always call this as a consumption stock within the financials. So I think if consumption remains strong, I think Bajaj should be valued both on book value and on EPS growth, and I think they can sustain 30%. So it may not be the multi-bagger it has been, in last 10 years, but I think it should be very steady going forward. The better ones, as I said, are something like Home First, which is into affordable housing. We are seeing a very strong housing upcycle, and it operates in the affordable housing, where they also do a lot of co-lending, very specific geographies they operate in. The average ticket size is about 10-11 lakhs. And they've done very well, 5% kind of NIMs, 4% plus kind of ROA, good pedigree. So that's something we like in this space, other than banks.
Sure, interesting. Since we're talking about the larger financial universe, here is VP Nandkumar as well from Manappuram Finance. He spoke with us just earlier today, and he's talking about how the gold loan portfolio is going to pan out from here. And he says that he expects extremely positive growth in this category, even going forward.
Gold loan, our expectation is to grow around 10% annually, and we expect that to grow, because we are the coming quarters are usually better for gold loan. And now, more importantly, we have other portfolios too, secured portfolios. We are growing those portfolios along with the gold loan portfolio, like MSME, secured MSME, commercial vehicles, etc. Because we have a very large customer base, both in Manappuram and the subsidiaries. So in these secured segments like commercial vehicles as well as secured MSME, our penetration compared to our potential has come to only 1/5. So we have that opportunity also along with the gold.
Coming in from Manappuram Finance, that stock has been doing quite well this week at least. It's up 7% today. If I have it right, yesterday too, that stock was higher by 5 to 7%. So with the last 3-4 trading sessions, it's had a good run so far. The other names include Alok Industries yet again. You have Marksans Pharma, which is doing quite well. CESC, that forgotten name, has managed to kind of climb up 5%, and then Prestige Estate. Gurmeet, what's your take on real estate? Would you still buy at these high levels, or for the people who hold these stocks, maybe just continue to hold, but not the best time to buy or add position?
Constructive on real estate. The reason being, there is a structural change post-RERA. You're seeing consolidation. The stronger builders are seeing not only the pre-sales going up, significant debt reduction as well. So look at, for example, DLF. First time you're seeing cash flow generation, significant fall in debt. They last year did about 15,000 crores of pre-sales. They are guiding for another 18-20,000 crores this year. Very marquee name, especially in the high-end luxury segment, especially in Gurgaon. Also, the DC CPL portfolio continues to do well. Almost 1,400 crores kind of rentals. Occupancy levels are high. Some point of time there will be some value unlocking there as well. And a lot of these companies, so DLF, for example, was $1,200 in 2007. It's still half of what it was. So I think I'm constructive, but you got to be a little careful in terms of what you select. Home improvement, which is a broader building material, there I think probably the balance sheets are even better. There the P expansion can be more. We've seen P expansion already in polycabs and APL Apollos of the world. You'll probably see more building material companies in tiles, in sanitary ware, in some of the other spaces, home decor really coming up.
Great to have you in the show as always. We'll let you go on that note. Let's get in on that note, some BTST trades as well going. Kunal, what's on your list?
So I'll go with two buy calls. The first one is about Titan, something which we discussed in the chart busters today. The stock inching towards a breakout about 3,300, 3,350 mark. So would suggest a buy with a target of 3,550, stop loss at 3,280. And Polycab is the other stock which is also confirmed a breakout. This is more of an early chart breakout for Polycab, a bullish flag and a pennant combination pattern. Buy with a target of 5,400 and stop loss at 5,200.
Right. Naresh, what about your strategies?
One, Hero MotoCorp breakout into new 52-week highs, stop loss at 3,230, target price of 3,400. Second is a buy on Sun Pharma, closer to new all-time highs, stop loss at 1175, target price of 1240.
Okay, so those are the recommendations coming in as BTSC trades, but that's how we are winding up the trading session. It could have looked a lot better had we ended the day at 3 p.m. because at that point of time, we were around 19,850, but in the last 30 minutes or so, we have given up quite a bit of those gains and ending just around that 19,760 mark. Bulk of that pressure is actually coming in from the banking index. So Axis Bank, ICICI Bank, HDFC Bank, these are the stocks which have completely flattened out, and that's the reason there was a sharper dip when it comes to the Bank Nifty. That has been the weak link for the markets for quite a few weeks and months now, and that still continues to be in a limbo, not getting out of that zone at all. Having said that, the broader markets continue to do quite well for themselves. Both the mid-cap and the small-cap index made a fresh record high today, and that's the reason the market breadth at the end of the trading session is favoring the advances. In terms of the sectors, you have to give it out to IT, one of the best gains that we have seen in the last 6 to 7 months. So that's the kind of solid run that we saw in Nifty IT, 2.6% higher. Coforge higher by 7%, Mphasis, a Tech Mahindra, a HCL Tech, and then TCS, of course, getting that support of that buyback record date being out. So that stock too was in focus. Real estate stocks continue to be at that 15-year high. The likes of Prestige, of course, are sitting at life high levels. So a 5% gain there. Sobha, Oberoi Realty were some of the other names from the real estate pack. From the pharma index, we were watching out for Glenmark, Dr. Reddy, Lupin and Glaxo. Separately, Bajaj Finance was one of the biggest newsmakers today that saw a very smart intraday recovery, opened with a cut of almost 2 to 3%, but ended with a gain of almost 2%. So that stock definitely deserves mention. You also have on the losing side PSU banking names. So Union Bank was caught up in a bit of a controversy. So that stock is down 2%. Bank of India, Central Bank, these are some other losers. FMCG too did not have a great day. The drags were ITC, Emami, Nestle. So these were the stocks which were at the losing end. From the broader markets, a few stocks that deserve The all-time high mention is MapMy India, higher by 7%, KPIT Tech and Craftsman Automation. So that's how we have wrapped up today's trading session. We'll see you back tomorrow morning. Thank you so much for tuning in.